So today we got Ian on the podcast. Ian, you got the sweetest beard I think we've ever had on the podcast. So I like it.
This is not to cut you off on your intro, but this is 15 years of trauma of having to shave every single day, which we'll get into in a minute.
Yeah.
Oh gosh.
Oh shoot. Well, Ian, I guess just go ahead and tell us a little bit about where you're from, who you are, and what you do primarily.
Yeah, man. My name's Ian Harwood with Equity Warehouse. We're based out of Baltimore, Maryland. Don't mind my background. We're in our new office that's not renovated yet because our router's down at our current office. But either way, we're based out of Baltimore, Maryland. We predominantly do self-storage and multifamily. To date, we have about a $70 million portfolio, but we've bought everything from single-family houses to multifamily to commercial to self-storage, you name it. We've probably tried it out, wholesaling the whole nine, but right now our heavy concentration is in the self-storage game.
So why self-storage, Ian?
Self-storage, we like it. I mean, you guys know, just grinding it out, doing deals. Early on in our investing career, we said that we want to own rental properties. That's where the wealth generation is. That's where the cash flow is. That's what we were looking for. We did single-family subsidized housing. Got our asses kicked. Don't mean to curse on your show.
No, keep it. It's free
we couldn't
game.
get into we couldn't get into multifamily deals because we live in Baltimore, Maryland. Tons of private equity, tons of people with tons of money. New York, Philly, DC.
Gotcha. All the funds.
Can't buy anything. And so really that's why we gravitated, from single family real estate, kind of skipped through industrial and multifamily and just got to self-storage because commercial assets, you're buying scale day one. Self-storage, you're getting away from residential and
Toilets.
retail laws, right? Like I don't have to worry about evictions. You don't pay your rent. 5 days, you can't even use the keypad to get into the building. You're locked out. 45 days later, you're getting a letter that says your shit's going to auction and you're gone, dude. You know what I mean?
Yeah.
Whereas we live in Baltimore, Maryland. Well, we're based out of Baltimore, Maryland. I'm still evicting people. We had 2-3 year evictions going during COVID, dude. We're still chasing people from the COVID BS.
Yeah. That's crazy.
And that's where storage is like really shown and shined its light to be like, you're the shining star asset class. Like I know it's super hot right now. A lot of people are chasing it. We got into it just before it got super hot. But dude, I'll tell you what, man, I really like the business. It's a little more creative, kind of like with wholesaling and stuff like that, where like you get to do some crazy deals. You're a little more creative on the leasing side. You're a little more creative on attracting tenants, a little more creative with like sophisticated owners on doing deals, which is nice. Better than the run of the mill single family every day. Hey, you want to rent my house? Great. You rent my house. I'll see you in a year. Talk about a rent increase. By the way, don't burn it down. Don't overflow the toilet. Don't break the air conditioning. Don't F up my house and face all these problems, So
I love it. So tell us, because I know we went a little bit forward on it, but Ian, when did you start in real estate and take us through the quick timeline of it? You don't have to go into extreme detail.
Well, way back when I played Monopoly. No.
I just played for the first time last night, Monopoly.
Yeah, exactly. So actually my business partner and I, we were both firemen full-time for the city of Baltimore. If you ever watched The Wire, that's where we worked. If you saw the riots that happened over the past few years, that's where we worked. The heart of West Baltimore, nothing good ever came in that place. It's a little bit of a wild town, to say the least.
Wild West.
Everything
Wild
you see
East.
on the internet is true. Sorry. So, but anyway, so we're both firemen for the city of Baltimore. We get hired in 2007 and 2008, respectively. From there, dude, 2008, all hell breaks loose, right? Like we took government jobs for security, for pension, for benefits, for, just long-term, healthcare and all these good things. Dude, pension funds go bankrupt. They start closing companies. They start coming after our healthcare. They come after our work schedule. We're working 2 days and 2 nights at that time. And then we got 4 days off. We were landscaping before our nights. Then 4 days off, we're landscaping all. Dude, I'm working 8 days a goddamn week. I'm like, dude, like, I can't do this. So what we said, we were like, what if we died? Like, dude, we were working a job that we could literally die.
At any second.
Yeah, dude, you don't know. And it's like, what if I do die? How's my wife and kids going to be taken care of? And I was like, well, when I'm asleep at work, I can make money with real estate because someone's renting it. If I die, she can sell the asset off. If I die, she can keep it and have a long-term income stream, right? Like those were things that we started take into effect. And then like, like there was dudes that would sit around the table with like 30, 40 years on the job. They're like, yeah, our pension's good. I'm like, Detroit went bankrupt. California went bankrupt. Like all this crazy shit's going on. Nah, dude, like I'm going to make it my own way. And so we bought our first rental property in 2012, bought it for 25 grand, had no clue what we were doing. We had a construction background. And this is where all this trauma comes from, having to shave every day for the fire department.
Oh, yeah. There we go.
Yeah. So, you have to be cleanly shaven so you can wear a mask. And plus it's paramilitary. They want you to be clean shaven.
Yeah, I was going to say.
Which is not really for me. But anyway, so we bought our first house in 2012, kind of grew a small portfolio. My business partner starts wholesaling, winds up with a package of 4 properties. And he's like, yo, dude, I got 3 Section 8 tenants in 3 of them. And I have this 4th house I really want to flip. And I said, I don't know. We grew up together. And I was like, sure, why not? So we sell off the first 3, make like 60, 70 grand. We flip the other house, a retail flip, make like 50 grand there, walk away with like a 6-figure payday. We're like, shit, that was awesome. Let's do it again. We did it again about 6 months later. And then from 2014 on, man, we just hit the ground running. And, we grew the real estate portfolio mostly out of need, dude. And mostly because the fact that like, we didn't have to take income off the table, dude. Like we were able because we were working our W-2 job, like it's really cool to be an entrepreneur right now. Everyone's like, just quit your job. You'll be fine. And I'm like, yeah, like I get that. But in the same sense, like you need to have a business. And by us having our W-2 job where we only worked 8 days a month, as much as I'm complaining about my job, we only worked 8 days a month, dude. Like, so we had a lot of time to do stuff. And we would go out and just grind real estate, dude. We would grind if you were not on a fire, I was grinding real estate. We weren't taking money out of the company. And, we wound up with 100 single family houses like that. We're like, holy crap. Like we did a lot, dude, a lot in a really short period of time. So.
Got it. Yeah. That's a great story.
That's awesome. So you grew a single family portfolio, and then I'm assuming there was some kind of pivot point to get to self-storage. What was kind of that journey?
Yeah, so in like 2019 ish, 18, maybe summer of 19, that's what it was. Summer of 19, a little bit before COVID, what we noticed was we were buying in an area down near where the Ravens Stadium is and the Orioles Stadium. It's a little section of town called Pigtown. We were buying a lot down there. We could buy shells anywhere from 5 to 25 grand, stick anywhere from 80 to 100 grand into them, be all in for like 100, 120 with carrying costs, get $1,500 rent. All day, every day, just go for it, refinance, get our money back, do it over and over and over again.
Keep burning.
Yeah. But then, dude, like all of a sudden it was like, shells are trading at 60 grand. We're like, okay, well, are they better shells? No, dude, people are still putting 100 grand into them. I'm like, okay, well, rent's gone up. No, dude, rent's still anywhere from $1,250 to $1,500. I'm like, this is stupid, dude. Like, what are you guys doing? Yeah. And so we took the time just to be like, we're gonna take the time to build our business and like, because we went hard, dude. We flipped like 100 houses in like the 2 years prior to that. Built a 100-house portfolio. Like, dude, we went hard as shit. And we said, all right, let's concentrate on our business. Let's concentrate on property management, and let's just take our time. But if you can't tell, I'm a little bit of a visionary type and I can't help myself. And I started digging around and I kept wanting to buy multifamily deals and we couldn't really find anything at that point. But I kept finding storage deals and I was learning from this other guy. I was like, damn, man, this seems like legit. And Baltimore doesn't have a good rap. It still doesn't have a good rap. And like, we wanted investors, market diversification. We wanted to get outside of our bubble and, operating in Baltimore where it's a really tough market to run residential real estate. I couldn't imagine going and buying like a multifamily deal in the middle of nowhere in the country or wherever and buying a multifamily deal and be like, yeah, the asset manager's got I just wasn't comfortable with that. But I was comfortable with buying storage out of state because I could manage it. I could remote manage it. I could do the day-to-day from here due to technology, the gate, cameras, boots on the ground. I could manage that from our own office. And my business partner and I both said, you know what, dude, like this makes sense. We get market diversification and we get out in the country. And really, again, it was kind of not out of a need, but it was like, we've kind of taken this market to where we can go. Let's see what else is out there and try something new,
So that was around 2019, 2020.
Yeah,
correct?
2019, 2020. And we got pretty good scale off of that. From 2020 till today, actually, we're in the process of acquiring another 100,000 square feet. We'll be just shy of 800,000 square feet. In relative terms, that's it's like 15 to 20 properties. It doesn't sound like a lot, but it's massive
Big
amounts
properties,
of
yeah.
scale.
That's a lot.
So who's someone that you guys looked at when you first started out? You know, because I know there's Scott Myers.
Yep.
He's in the mastermind of ours.
Yep.
Um,
I went to Scott's, went to one of his events. He does a lot on like ground up development and like us as single family value add operators. Like, I don't know. I'd always look at the new build guys. I'm like, why are you going to take all that risk? You know, like it wasn't for us. Let's buy cash flow. And so the value add model came more into my mind. So like I went to Scott, respect him, learned from him, actually went to 2 or 3 of his events. Left out of him. There was another guy, Mike Wagner, the Storage Rebellion, learned from him, more of the value add model, but he likes more tertiary markets. So I kind of put the 2 and 2 together. Ones. Yeah, he likes like really rural stuff. And I don't know where you guys are, but you know, really rural towns, like, you know, under 10,000 population. I'm just like, not really for me because we're city boys, you know.
Little Baltimore boys.
Yeah, exactly. We're used to rooftops. I'm used to density. I'm used to people. Like, all right, I'm in a city. I get it. Like people move in, they move out, they do their thing. I get it. Yo, when you're in the middle of nowhere, like I always equate it because like it's funny. He would talk about tertiary markets, and I'm like, okay, well, we have a cabin in upstate New York, up by like Lake Placid and the Adirondacks. Yo, I'd go up there, and I'm like, people just keep all their shit out front in their front yard. So like, why do they need storage? But people do, and I was like, all right, that's not really for me, but it's good for them. So I kind of landed in the middle. 50,000 to 100,000 person towns is kind of what I look for. Smaller capital cities like Little Rock, Baton Rouge, Mobile, Alabama, like small little towns. I'm not going after Nashville, primary MSA. I'm not going after Baltimore. I'm going after decent sized towns where I can buy some scale and go for it. So I took what I learned from Scott Myers and what I learned from Mike Wagner, kind of put the two together and created my own investment thesis. Since then, there's also AJ Osborne's out there teaching. He's got really good content. He's based out of Idaho. And there's a few other teachers out there, but I'd say they're the 3 big ones right now that are putting out legit content, all in different areas of the business, you know?
All different realms. Nice.
Yeah. So you said you were running across a bunch of self-storage deals over in Baltimore. Were they just coming from like direct to seller marketing, like what you do for wholesale? And is that just
So commercial wholesaling's hot right now. So if you guys light up a list, let me know. I'm in. I'll be your number 1 buyer. But anyway, no, we've bought deals direct to seller. We've bought deals from wholesalers. My primary market now that we have scale is buying deals, mostly off-market deals from pocket listings from brokers. That's what I like. And I'll tell you, I like it because the brokers got these deals. They don't know how to monetize them. They're like, oh, well, I just can't take it to market. Like we bought a 250,000 square foot, 3 property portfolio in Baton Rouge. The guy never took it to market. And the guy didn't want to take it to market because the seller said, I'm so afraid to lose my employees. I'm thinking, what $40,000 a year employees looking at Crexy or LoopNet seeing if this place is for sale? You know what I mean? But anyway,
how much would that be, by the way, too? For respect?
What's that?
How much was $250,000 of a square feet? How much?
So we paid right around $40, or a little over $40 a foot. It was $11 million, and we put about $1 million of capex in, totaling about $12 million. And today, the way it sits, I believe it's worth somewhere between 20 and 25 million bucks. So, and that's kind of what we look for. We look for brokers that got, like, I'll tell you, my best finds for deals right now is wholesalers, guys like you that are uncovering deals. I always love you guys because, go make as much money as you want. If it's a deal, I'll pay it. I don't give a shit how much you're making. We're buying a deal right now in Livingston, Texas from a wholesaler. He's making $200,000. I do not care. I love the deal. I think it's a great deal. And really, the other big one is brokers that don't know what they're doing. There's a lot of commercial brokers that do not understand what they're doing. And the other one is when residential brokers get a commercial listing. 9 times out of 10, they just screw it up. They have no clue what it's worth, and they just mess it up. I'll tell you what, some of the best deals I bought is from residential brokers having a storage facility.
So how do you market to those? You just say, hey, screw it. I'm going to go to all realtors, residential realtors, and target them and say, hey, you get anything commercial, come to me.
MLS has gotten a little bit better. It's kind of easy to comb and set up like nationwide. But honestly, a lot of I didn't gain all this weight just by sitting around and doing nothing. I sitting in front of the computer, just grinding out late night. Kids are crying, babe, I'm working, and just keep grinding the computer, typing commercial asset for sale or storage assets for sale in whatever state, and going to like the 8th page of Google. Then you get down in the dirty shit, dude. Like the first 3 or 4 pages is going to be all the brokers. Get past page 3 or 4, dude. Then you find all the dirty stuff. You're like, holy crap, dude. Like, this is where it's at, and it's just really putting in the work. Anybody that says, I can't find a storage deal right now, I think's a lie, or a deal in general. You're just not looking hard enough, man. You're not grinding it out, is my gut feeling. So,
yeah, I like it. So what kind of things are you looking for? Like you said, these are the dirty deals. What are your kind of your
do you have a certain market too now? By
market, I would say is I prefer Sunbelt states. I don't need any more snow in my life. I will go. A lot of people are chasing Sunbelt, so I took a trip out to Detroit recently to take a look. I didn't think you get much more ghetto than Baltimore, but they've done it well. They might have won, dude. They might have won. So I'm a pass on Detroit right now, but we're checking out other areas. I'd say we're agnostic. To me, here's a few pointers that I'll give you guys. Let's see, it'll probably be 4 or 5 tips. Number 1, if you're traveling outside your own market, make sure it's something that's a direct flight or you're willing to travel to relatively easy. We bought in Baton Rouge. Well, Baton Rouge is an hour from New Orleans. If I could get a direct flight from Baltimore to New Orleans and then drive an hour to Baton Rouge, doesn't sound like a big deal. Do it in 3 hours, 4 hours, no problem. The problem is when you land in New Orleans, you got to take a 30-minute goddamn bus ride around the terminal to get to the rental car place. So then it just turns into a whole ordeal. So now we lay over through Atlanta and then go out to Baton Rouge. So number 1, make sure it's somewhere that you're willing to travel easy, whether you're willing to drive, fly, float, whatever you got to do to get there. Just make sure it's something you're willing to go to, because even if you have a property manager, you need to still go to your site and check them. Number 2, I would say on the buy criteria, not so much for location. So for location, for me, I don't really like going west of Texas, west of the Mississippi. West of Texas is kind of like my point. Southwest direct usually helps a ton because you can usually get if Southwest is flying to and from, you can usually get in and out relatively easy. Hub to hub is always great. But that's kind of for us geographically. But I know people that buy all over the country. And we like to buy in markets that we've already established a footprint in. Again, Mobile, Alabama, Mississippi, Baton Rouge, Little Rock. Now we're opening up Texas, right? Like we're building scale in one geographical location. I'm not going from Florida to Detroit to California and have ones all over the place. Number 2, or more on the buy side of things. When I first got started, I said, okay, well, how am I going to do this? Because there's a lot more that goes into it, right? These pro formas get more and more convoluted every single day because you become more and more aware of stuff. But in the same sense, I always go back to the simplest form. If I can buy a facility at replacement cost or lower, I am winning. So if replacement cost on just a drive-up type facility, not climate controlled, like just your run-of-the-mill big long storage building, if I can buy it less than $45 a foot, I'm winning because I'm getting the land for free. So I always look for that. I always looked at if I'm buying it for $1 million, I try to make sure it's worth $2 million and I double my equity. Not an end all be all, but it's something that I always take a look at. I look at cash flow. And finally, I just look at it to make sure it's a town that I want to be in. There's too many times that people are like, oh, I'll just buy there. It'll be fine. Dude, like you got to do your homework. Like we're buying in a spot in a town that has a negative population growth over the past 5 years. But talking in the streets, talking to our title agent, talking to our vendors, the town is starting to go through a massive redevelopment because of the opportunity zones. So we're saying, all right, we're going to go buy storage there and we're going to take a try on it. So those are a few things that we look at. It's a lot more convoluted than that. Our pro formas are like 10 pages now. But those are the 4 or 5 things that are like a must-have for us.
Interesting. Got it.
So buying it below replacement cost, and if you do it there, then just based on the way things work, it's going to cash flow. It's going to.
Yeah, 9 times out of 10, usually if you can buy it below replacement cost, the rent rates pretty much, I don't want to say nationwide, but more or less geographically, you can kind of figure out where they are. 9 times out of 10, you can get them to cash flow if you're buying sub replacement cost and not even really have to think about it, even with debt at 5%. That $11 million deal or $12 million deal I just told you about, our debt was 3.125. And I bought it at replacement cost, right? And if I can get it to where it is, it's going to cash flow like crazy. But yeah, even on day one, it worked. Cash flow on day one's a little bit harder to predict. Cash flow on day, surprisingly, cash flow where you think you can get it to go is really easy to predict if you can assign the right numbers to it. Doesn't always mean it's going to cash flow on day one because there's some bad operators. I mean, we bought our first 100% vacant facility last week. As a part of this 4 property package that we're assembling right now. And that it's very rare that you come across completely vacant facilities. Because when you're buying B2B, you're doing a lot more B2B.
Yeah, it's
right?
more business.
100%, dude. Because think about it. Most of the time, let's think about how storage facilities get built. The most successful person in town was like, I got some extra land at my auto shop or my construction company or whatever it is. And they go put up this business out front, and then they got these storage units. So you're dealing with business owners, and usually their stuff's in order. But just because your business is in order doesn't mean everybody else in this country's business is in order. There's a lot of bad operators out there, a lot of mom and pops that allow you to step in and do it. Like this one in Livingston, Texas, everything is literally on paper, dude. There is no management software, and it's a nightmare trying to unwind. But it should be a really easy value add because we know he's leaving a ton of money on the table. He said
the system's up.
Yeah, dude, he has no debt on the place. All he gives a shit about is, I'm getting my 20 grand a month. I'm good. I'm like, dude, your rent roll should be like 40 grand a month without trying. And he's like, all right, yeah, dude, you do you. I don't think it's going to happen. I'm like, okay, I'll buy it from you. I'll gladly pay you that price.
Yeah.
Yes, happened to my 17 unit too. There was an old operator and he didn't even have anything. It was just all on paper. He would go hand collect the rent. And, we were able to come in there, raise rents like almost more than 50% with no rehab just because it was so undervalued.
Right. And that's what we look for in storage. It's not always a CapEx play, right? Like that's another reason like we got away. I don't want to say we got away from multifamily. Like we're buying a 47 unit multifamily building right now. We haven't necessarily got away from multifamily. It's just that we like storage so much better.
Yeah.
Dude, think about what you got to do to turn your apartments. You got to paint them. You got to replace the flooring. You got to do the kitchen cabinets. You got to keep up with the Joneses. So if your neighbor's doing crazy shit, you got to do crazy shit. In storage, I care about a few things. Is it lit up? Check. That's a long-term CapEx project. Is there cameras? Check. Long-term CapEx project. All right. I like to replace all the doors because we're legacy owners. I want to make sure all the doors are in operational condition. Great. I'll do that. Paint it. Landscaping and paving. That's it. That's all I look for. Other than that, dude, I'm not going in there every time someone moves in and moves out. I got to go do a goddamn $5,000 turn. As you can tell, you have PTSD over that, right? I don't care how good your tenant is. You're always painting a wall. You're always fixing a floor. A toilet's running. All these other things. In storage, it's real simple. In and out, in and out, in and out. So
what is it? What's the turnaround? Oh, my bad.
Go ahead, Chandler. Go ahead.
What's the turnaround time on like a project like this that's 100% vacant, just for you to get it back to stabilization?
So 100% vacant facility will go in. CapEx is our strong suit. We'll probably take 6-9 months to get that thing back up and running. All new doors, paint, lighting, cameras, paving, landscaping, new gate, new keypad. Right, that's going to take some time to get all that. It'll probably be less than 9 months, but that's what we told our investors. And then from lease stabilization point, it's only 17,000 square feet. It's not a huge facility. It's actually really small for us, but we're buying 2 other facilities in town. Will give us 75,000 in that town. But that facility there, I expect 2 years to get it 100 or to 95% leased, plus or minus. We're probably going to have to do some lease concessions and things like that. But I expect that thing turns around relatively quick. We're in a college town, number one. Dude, colleges are great because people move in and out. We're in a town that's got a ton of construction going on. Contractors need to lease the units, right? Like they need places to store their materials. We got relatively big businesses in that town that for supply chain type stuff. So those are all things that we look at when we're underwriting the deals. Not so much. We do look at square foot per person, but we also look what's going on in that town. Oh, and on top of that, the town's about 50% renters and no basements, no attics because it's a southern town. Mm-hmm. So that's good for us because we know people need to store stuff. We know people are a little more transient. We know that they need places to lease. And the other two facilities we're buying, based on the competition, they're all 100% filled up. We know we got 3 bad operators here, and we'll get these filled up. So it'll be a pretty quick turn. I expect 2.5 years total.
Yeah, that makes sense. I like the depth of what you're looking at.
So tell me, Ian, too. So I've just heard this around, because self-storage is more now like a business, right? Like a store. So how is that different? What have you guys done? I mean, is there nationwide? I mean, you said you do the management at your office there. Like, how does that look now in terms of if you were just going from single family going into that space? How does that look?
So that's a really good point. A lot of people are going around saying self-storage is the easiest business you can do in real estate. Well, I like to believe that is true. It is inherently potentially easier than residential real estate based on consumer laws. However, it is very complex. So what we like to do is we underwrite the real estate asset, right, from a real estate mindset of saying, okay, this is what I think it's worth. This is what I think I can finance it at. And the banks look at it from a real estate point of view. The business side of it is a lot more, dude. We're running a hotel or a Southwest Airlines. We are running a forward-facing customer service business. I got Google paid per click. I got Google My Business. So there's a whole advertising department. I got a call center. You call from the hours of 7A to 7P, you're going to get a real live person that's going to move you in, work through your problems, whatever it is. I got a website where people can move in and move out. I got dynamic pricing. So if I'm 100% or if I'm 85% full on my 10 by 10 units, you might pay above market because I don't have much inventory left. But if you go rent a 10 by 20 unit and I only got 30% occupancy, you might get a better deal on your 10 by 20 unit than you will on your 10 by 10 unit. So I got dynamic pricing similar to a hotel and airline company.
Yep.
Where it is located on the property. Oh, you're right near the gate, right near a camera where it's super secure. You might pay a few more dollars for that. Tenant insurance, revenue generator, 24-hour access, revenue generator. You want to rent pallets from us, revenue generator. I don't do a lot of that, but some people do. I sell you if you man boxes. Your stores, which we don't. If you man your stores, you could sell products, boxes, mattress covers, locks, the whole nine, right? I get an admin fee for moving you in and out and giving you a free lock. The lock cost me $4. You moved yourself in online. I made $16 for doing nothing, right? So it's more of a dynamic business and customer service business up front, but you are underwriting the real estate asset. And so I don't want to say I get offended when people are like, yo, it's super easy business. Yeah, it's super easy compared to what we're used to. Like, think about it. Your 17-unit building, you rented your 17 leases, and what are you going to do? You're going to talk to them next year. You're going to raise them by 3%. You're really not going to wheel and deal, right? Versus us, it's like, you're on month to month. If you're not paying market, I could raise your rent tomorrow. Let's say you're paying $50 for your 10 by 10, but market's $100. There's nothing stopping me from saying, next month you got to pay $100. Is it right? No. Do we do that? Absolutely not. But people do, right?
Yeah.
And you get higher churn rates. You're turning your money. You're staying congruent with the market. So we're going a little more like this, based on inflation and other things. But I can keep up with inflation much easier in storage than I can on any of my multifamily, industrial, or single-family properties because we're locked into long-term leases over there, which is, another big difference between storage and the rest of real estate.
Yeah, but it also opens you up to, like, if you aren't on top of your stuff, then you could get screwed way quicker, right?
Yeah. Oh yeah. If you're not managing your lock audits, your auctions, if you're not managing So like a lot of the dynamic pricing we do is against ourselves. But let's say we were competing in the same market. I'd be like, oh shit, Gino and Chandler in town. They just tanked the prices. I got to run some specials to keep up with the Joneses. It happens. But once you achieve occupancy, you're competing against yourself and where rent rates can go. We're getting above market rent rates, and people are like, oh, people are going to move out because they're paying $10 more than what it is advertised online or whatever, because pricing might have come back down. I said, you really think someone's going to unload their 10 by 20?
All that work.
Yeah, all that work to save $10?
No,
Absolutely not. Here's a good story. We had this guy at that big portfolio that we had bought. We've owned it 9 months now. We've been telling our managers, because he does appliances. He's got 15 units at our site, and he does appliances. But every time you pull up, his appliances are in the goddamn road. Like it looks terrible. And from a private ownership standpoint, I'd rather make less rent than deal with him. So we all decided, whatever, he's paying like $2,000 a month right now. And I said, look, get him to $4,500 or $5,000 a month. I'm willing to deal with the problem. After 3 rent raises, he got to like $4,000. He said, that's it. I'm finally moving out. But we made all that extra money in this 8-month time frame because we kept driving his rate to the point where he finally said, I had enough. I'm leaving. Okay, good. We know what the
floor
tolerance level is now. Yeah. And when we reset pricing for the market, it's like, okay, well, we got rid of our biggest problem. He was willing to pay that, and he was a problem child. Imagine what we're going to get at market. So,
yeah.
So what Chandler was trying to go into, Ian, I'm just curious because, again, it's more of like a consumer-based business, customer service a lot. What does it look like? And I know you're just getting in. You've been here 3 or 4 years into the self-storage, whatever it might have been. What is your outlook on the financial market, in terms of if there is a recession, which there is currently, but that's against the fact, there's a new definition of recession. But
should I get my I can't. I don't want to talk politics. But I'm sure we're on the same page here. But anyway, from the financial market standpoint, look, I believe a lot of people are out there touting, storage is recession proof. Well, sure, people always need storage. People are downsizing because they're getting foreclosed on. They can't afford their big houses anymore. Americans are great for storing shit and saying, you know what, I'm going to get back in my house. I'm not selling my heirlooms. I'm not doing this. Do I believe it's a recession-proof business? I don't want to go out and say it, but there's a lot of factors that tell you that storage is a need more than some other things, say an Airbnb, a Ferrari that you Turo or whatever the heck it is, right? Like, I believe that storage is more intrinsically safe than some of these other investments. However, I think you can get damaged. I think you need to pay attention. You need to pay attention to what the debt markets are doing, taxes, expenses. Sure, we can keep up with expenses. I could keep driving your rates. There's some operators every month, no matter what, they just give everybody a $1 rent raise or $2 rent raise. They don't give a shit. They just do it every single month, and then they get the churn and whatever else. But in the same sense, it's like, I could keep doing that, but then you got to worry about the other operators that are buying, and there's a lot of money flooding into this marketplace that can potentially drive down, and they got a lot more money than me and you guys do, that they can withstand a really long, cold winter, and they can drive rates really freaking low. So we're in a predominantly REIT market in one of our markets. It has not affected us, but we are very cautious to what they're doing in the marketplace because, the financial market thing, that shit's real, dude. Like, I don't think enough people put weight on that to say, all right, well, what's going to happen with this market? Where's it going to go? What's going to happen? Forecasting. What's a stress test? Dude, like, we stress test all of our deals. All right, I assume 100% of this and I'm still remaining cautious. Well, what if it's at 80% of what I predicted? What does that look like day one and at the end of year 5 when I expect to be completed with this project? I think a lot of people should be doing that from an underwriting standpoint and really stress testing what they're doing and what they're putting out there, because I see too many people that are still happy-go-lucky. You guys probably see it in the single-family world. People still buying, dude. I'm like, what are you doing? Like, am I missing something here? Like, we're selling all of our single-family houses because I'm like, I'm going to capitalize on this opportunity because I can't believe people are still paying what they're paying. Resident, retail, and investor markets. I'm like, what are you guys doing? I'm missing the mark, So.
So Ian, how has the rates like affected any like the refinances on the forecast for your refinances? Because one of my buddies, he does a bunch of syndications, and he's like, one of our refinances basically we thought we were gonna make like a couple $1,000,000, and in turn it's gonna be like a few $100,000 on the refinance. Has that had any things that come up on your end?
Facts coming in.
Yeah, dude, I don't even know who still does faxes.
Yeah, right.
Sorry, so this place is sorry, I don't mean to cut you off. This is my
you're good.
in-laws' old business. They used to sell and service outdoor power equipment. We just bought the building. We're getting ready to re-renovate the whole place. So I have not moved their fax machine out. Again, paper business. There you go. But
Take that business.
the refinance side of things, dude, we're still getting good leverage. I mean, I was just quoted the other day. We do a lot of life insurance type loans. From life insurance companies, I can still get 4.7, 4.85, somewhere in there. Still getting 75% leverage. Are people as willing to bump what they think it's worth? It's been a little more cautious. I just had an appraisal issue on one of our deals, but it was more of a bad appraiser than it was necessarily a bad appraisal intrinsically.
Mm-hmm.
But I do see people being more cautious on the commercial side of things. Yeah, dude, it's fine. We go into these deals. We tell our investors, look, if we can refinance and get all your money back, it's a win. If we can get more money above it, it's a bonus. And if you get a few dollars stuck in the deal, you know what? It's just like your stock portfolio. You win some and you lose some. And overall, your total return is going to be great, right?
Yeah.
So you look, banks are still lending. They're being more cautious. Are they as crazy as when they were during COVID? No, they've loosened up. But they are starting to clamp back down, especially God knows. Oh, I don't even think our president knows what he's doing, but God knows what's going on with the Fed and our president, and who knows what's going to happen. Here's my one financial prediction. I'll leave it on your show. In 2 years, I'll come back and we'll talk about it. But I believe after 2024, after the next presidential election cycle, we'll know where we stand a lot better, whether we're in a good place, a bad place, or somewhere in between. I don't think the midterm elections should slow some of this up.
Yeah.
But I think once they're done, they're going to keep trying to hammer down until 2024. So I think it's going to be a little rough for the next 2 years, plus or minus.
Yeah, I agree with you there. One quick thing, Ian, I went quickly by and I just wrote down just because it caught my eye. How did you figure out if a tenant's, you said 50% the town renter,
Yeah. So you can do a few things. You can go through the census data. There's a couple good sites out there. Don't quote me, guys. Missouri circular data, Google something like that. Give you a lot of intrinsic value to what's going on in a 5 or 10 mile radius from where you're looking. So you guys got to remember, we look at 1, 3, 5, and 10 mile radiuses. If I'm in a super tertiary market, 10 mile radiuses, right? There's not a lot of people. I need people to rent from me. If I'm in an urban city, I look at 1 mile radiuses. And if I'm like where I'm operating, I look at 1, 3, and 5. That's what I really give a crap about. There's also another website, Radius Plus. They aggregate some data. It's not always super accurate, but they aggregate data. And a lot of this comes from the Census Bureau and Googling about the towns. Yeah. And so like what we'll do is, let's say we're operating here in Baton Rouge, and this is the site. I only care about the 3 miles inside of Baton Rouge. I don't care about the 70-mile city. I care about the 3 miles around that. And then I might say, okay, well, there's another storage facility here. Let me check that 3 mile ring. There's another one here. And I look at all the overlapping rings and say, okay, well, I think this many people will guaranteed be renting from me. Great. What does that look like inside this ring? And what does it kind of look like on a 5 mile ring? And really get a good understanding of who and what I have. Some guys, they really put a lot of weight on the median household income. I would fight that, and maybe it's just my experience of working in the hood and my experience of doing Section 8 housing is money aside, people are still going to rent storage. Just the less money they have, you just got to deal with a little more problems. So a lot of guys, they like $50,000 plus median household incomes. We'll go down as low as 35 for traditional. And on climate control, a lot of people like to be 70,000 plus. And we hit that $50,000 mark. You just got to adjust what you think your rent rates are going to be, what your turnover is going to be, the life expectancy of your tenants, right? Like these are all things that start to factor in. And again, like I want to keep it simple for everyone here when they're looking at storage. If you can buy something less than replacement cost, most likely it's a good deal. As you start to get in the business, then you start adding all these things to your underwriting pro formas. You throw out every goddamn deal, and you're only doing one out of like 100 deals. But to get started, I would say, look, find something that's under replacement cost, and most likely you won't get damaged, and you should be in a good spot.
Ian, just because I know we got listeners that are going to see this from all different levels, what exactly is replacement cost?
So for traditional drive-up type storage, the long buildings with the garage doors on the outside, right now you're at about $45 per foot. Most likely you're not going to come across a climate control one in that condition, but replacement costs on climate control is about double that. You're looking about $90 to $100 a foot. And again, you're looking at that building saying, okay, well, if I can buy 10,000 square feet at $45 a foot, that's $450,000. I get the land for free, right? Like that's just how I always viewed it. That's how I got involved in the business, and it worked for me. And again, over time, that has changed a lot. But I still always go back to that and just say, all right, what am I paying per foot? Ooh, I'm paying like $70 a foot. Well, right now, market's only across the country right now, they're selling for 80. That seems a little tight for me.
Yeah.
You know, I might not do that, you know, and it's just a good stop measure to be like, all right, everything else makes sense over here, but what does it look like here if I had to sell it? You know, I'm kind of pressing up on some numbers here. I don't know that this makes sense. So
I like that. So Ian, what are some of the big things you got, the big blocks you're trying to push for the future? I know you said you're more visionary. So where are you looking to take this thing?
Yeah, so we just so we got a small team. We just added our 5th employee, another project manager. And you know, we had a big conversation. You know, we're sitting at $70 million. You know, we're grateful for where we are. It's a large portfolio. It provides a lot of cash flow. We're just grateful for where we are today. But you know, we're all young. Our project manager, our main ops manager, Ryan, my business partner, we're all 40 years old or just under 40. And I said, dude, like, we're still going to be around for a minute. Like, what do you guys want to do? And we said, if we could hire this one employee, we believe we can double the portfolio, maybe even triple it. And so that's kind of what we're looking at. Everything's always based on cash flow, not so much on the dollar amount of the assets, and really just concentrating on storage and concentrating on what we all do on a daily basis, and just, you know, keep grinding it out, man. That's really what we like to do. And other than that, on a personal level, I am in the process of getting my pilot's license. Those are the 2 big things I got going on in my life right now.
Heck yeah.
Yeah, I like that. Are you
traveling, Ian?
What's that?
Do you like traveling, Ian?
Yeah, I do like traveling. One of the things behind the pilot's license is to be able to go to our facilities. You know, like we had to schedule a trip. It took everybody a goddamn week to like be like, all right, what day are we going? You know, it's just a whole thing, finding flights. Man, it'd just be nice if we had a plane. I don't need a jet. I don't need that whole thing. But it was like, dude, we got a plane. I'll fly down. I don't know if you guys will trust me, but it sounds good on paper. So anyway, it's just something like, it's cool. You know what I mean? You know, and I left the fire department. I still need some sort of adrenaline rush and something to do, you know? So
that's right. You flying a Cessna right now or what?
Yeah, flying a Cessna. I just completed my last check ride prep test thing. So hopefully here in the next 2 to 3 weeks, I take my final test and I'm done, and then I can start on an instrument.
Yeah, dude.
How many hours is it you projecting it'll take?
Right now I'm sitting at 52 hours. I'll probably wind up being 60, and that's the industry average of 60 hours 70. To get your license. Yeah, 60 to 70. You know, and we were flying when it was $7 fuel. It got a little expensive, but you know what, man? Like, it's fun. It's great. It's like golf, dude. You know, like you go out and golf, and it's just like mind numbing. Like, dude, you get in there, you're concentrating on all the controls. You can't find your cell phone. You got no service.
Yeah, you're not thinking about it.
Great, dude. So
it's good relaxation.
Yeah,
you gotta have it. Love it. So, I guess at this point, Ian, just be thinking of what you want to leave the listeners with here. I mean, we've had a pretty good conversation. I think a lot of good info for anyone who's trying to start doing self-storage, or really if Ian also let them know maybe a couple things to bring you if someone finds a deal, how to reach out to you, and basically just a couple things on that as well.
Yeah. I'll leave you guys with my contact info, but I think this is more important for everybody. I don't care if you're trying to do a storage deal, single family, wholesale, whatever it is. Go out there and swing the bat. If you're worried about money, you got a good deal. Money's going to find you. You're worried about if you got you can't find a deal, but you got money. Somebody out there has got a good deal, dude. Go out there, swing the bat, tell people what you're doing. Wear your heart on your sleeve, man. Let everybody know, and things are going to start happening for you. Put it in the universe and just go do it. If I would have sat around and listened to the guys at the kitchen table talking shit how bad Section 8 housing is and how it ruined the city, I would not be sitting here talking to you guys today.
Exactly.
So I encourage everybody to go swing a bat, whether it is go do your own deal, invest with guys like us or you guys, whatever it is. Just get out there and do something and get in the game and learn. That's what I want to leave everyone with. I think that it's a lost art right now. Too many people are like, oh, I'll buy this course and I'll do that class and I'll just talk about it and I'll talk shit and go on Instagram and talk. No, dude, like just go do the goddamn deal. And then like, let's talk about the deal that you did and we can break down what you screwed up inside the actual deal that you really did. And I think that's the most important thing that I could leave everyone with. And if you want to do it, you're going to do it. But if you got a deal, if you come across a storage deal, a vacant shopping center, anything that you might think is good for storage, land, vacant shopping centers, or an existing storage facility, and you don't know how to put it together, reach out to me. It's ian@equitywarehouse.com, or you can hit us up on our website, equitywarehouse.com, where we have some case studies on what we do and how we have people co-invest with us. Or you can track us down on social media, Equity Warehouse. We're on all the platforms. Not a big TikToker, but Instagram, Facebook, YouTube. We're there. Reach out, send us a DM, and I might not respond immediately, but I will get back to you at some point. I promise. So.
Heck yeah, and I think that's big, Ian, what you said there, because a lot of people, they get stuck in the $20 million deal. How am I going to find someone to do this with? Well, for one, if they're listening to the show right now, they know they can go to Ian. Right. And that's what I've learned over the years, like the mastermind groups we're a part of. If I have, and we have one guy in our mastermind that's looking for $200 million multifamily deals. If I find someone that fits his criteria, I don't have to worry about the money. I got the deal. Me and him can come together and partner on it. Right.
Yeah. So, no, I mean, even me just doing this podcast, someone said, I think did you guys have Stratton on a few weeks ago? And he's like, dude, you got to do this podcast. I'm like, hell yeah, I love doing podcasts, but just doing this podcast, telling you guys what I do, who knows, you're going to come across a storage deal, be like, yo, how can we work together? Right? Like,
exactly.
Again, just swinging the bat, putting yourself out there. It's a no-brainer, man. Absolute no-brainer. So
100%. Ian, it was a pleasure.
Yeah, man. Thanks, guys.
Appreciate it. We're going to hit you up. I'm going to hit you up on Instagram too.
We'll
Stay
do.
in contact.
Thanks
again for coming on.